Q4 is seasonally a weak quarter for IT companies, but it will be different this time. We are expecting them to post strongest Q4 in last 5 years. That's the kind of expectations we are going in this earnings season. As far as tier 1 companies are concerned, which is basically TCS, Infosys, HCL Tech and Wipro, we are expecting them to post a constant currency revenue growth between 2.5% to 4%. In case of TCS, the growth will be 5%, which will be the sector leading growth. That's what we are expecting in dollar terms, and this will be largely led because of the strong deal wins they've been having in the past few quarters, and this time the wrap up in these deals that they've won will basically help them in clogging some top revenues. We are expecting the deals to add roughly about 2% to the revenue growth at this time. As far as margins are concerned in TCS, we are expecting margins to remain stable. While this case might be different in case of Infosys, HCL Tech and Wipro, because the wage hikes are likely to impact their margins and margins will contract in their case. As far as tier 2 companies are concerned, which is basically mid-cap IT companies, we are expecting them to have a stronger growth than the tier 1 companies. We are expecting them to post anywhere between 3 to 5.5% kind of growth in this quarter. We are expecting the strongest numbers to come from Coforge, while in case of Emphasis, this time it might be slightly sluggish. But in case of IT, it's not about what happened in the past quarter, it's all about what is looking like for the next quarter. So we are looking out for the management commentary for what they are expecting as far as FY22 is concerned. As far as guidance is concerned, which Infosys and HCL Tech gives, we are expecting them to guide in early teens kind of growth for FY22. We are expecting Infosys to guide 12 to 14%, while in case of HCL Tech, this guidance might be 10 to 12%. TCS doesn't give a guidance, but we are expecting them to say that they are confident that they will be having double-digit growth and they will stick to the margin guidance of 26 to 28%. That is what we are expecting from the tier 1 companies. As far as tier 2 companies are concerned, we are expecting them to guide a stronger Q4 mid-teens kind of growth. We are expecting them to guide for FY22. Margins are likely to remain stable. Having said that, there are some risks on the horizon. Risks are largely because of the resurgence of COVID in Europe region especially. Whether that will have an impact, we will watch out from the management commentary what they are saying. Whether BFSI, which is the strongest contributor, is seeing some kind of revival. How long this digitization trend will continue with their clients. Is there a case that we can see these deals drying up towards the end of the year? That's something that we need to keep an eye on. Other than that, there are also supply issues. There is talk about that wage revisions will be stronger in next fiscal. There could be attrition going up because the demand picks up for IT professionals. There be attrition higher. So these are the two factors that you have to keep an eye on. But the management commentary will be key in deciding how the IT stocks will move from here on.